The following is paid programming.
I'm a big fan of money. I like it. I use it. I have a little.
You want something more.
I keep it in a jar on top of my refrigerator.
Something more from your hard work.
I'd like to put more in that jar. That's where you come in.
There's gotta be something more. Gotta be more than this.
Whether it's financial planning, mortgages, insurance concerns, or those quality of life issues that make the money matters matter. Whatever is on your mind today, call Something More now, toll free, 866-771-8901. Come on, let's get you something more.
I still can't even hardly believe my ears when you even tell me this.
Gotta be something more.
Something More with Chris Boyd, certified financial planner professional, advising clients across the country. Here he is, J. Christopher Boyd.
Welcome back for hour two of Something More with Chris Boyd. My name is Jeff Perry. I'm an investment advisor representative with Asset Management Resources, and I have the privilege of sitting in here today with Chris, who's on as the weekend off. And speaking of the weekend and going off our last topic, talking about holiday spending and such, right now, Saturday and tomorrow, Sunday, are the last 2 days of the 27th annual Stuff-A-Bus by WXTK, led by Kevin Matthews. He's down there in front of Target at the Cape Cod Mall with the bus, as he's done for 27 years, collecting toys for Tots, and all the new unwrapped toys that you drop off stay right on Cape Cod. I believe the number that they gathered last year was 25,000 toys, and especially with the pressures on parents' budgets this year and inflation and such, your donation of a toy or two will make some child have a more blessed holiday than they would have had. So I would encourage you to do that. Drop off your unwrapped new toy. We have been collecting them at Asset Management Resources the last couple of weeks, and our CEO, Chris Boyd, is bringing down all the toys that we collected. So if you want to join that effort and you find yourself in Hyannis, drop your toy off. If you don't have a toy, you really don't have an excuse because the bus is in front of Target. So you can go right in and pick something up and give it to Kevin Matthews on the way out. And if you do, tell him you heard about it on WXTK with the Something More with Chris Boyd show. And on that theme for this segment of charity and giving and being generous, I'm very happy to have with me Mark Scala from the United Way of Cape Cod as my next guest. Mark, welcome. You've been on the show before. Welcome back.
Thanks, Jeff. I have been on the show several times with you and with Chris as well. So it's always a pleasure to be on the show. And you were just referencing, giving. I don't know if people are aware that 31% of all giving happens in December. Nonprofit organizations raise between 26 and 50% of their annual budget in the month of December.
Wow.
It's pretty, in the last 12% of all giving happens in the last 3 days of the year. So it really is a giving time and an opportunity for those who have to help those who may be struggling.
I want to talk about some of those statistics, but before we get into that, and I want to talk about the need and what,
Sure.
Who the United Way supports and all. I know the United Way from back, I think I was in my early 20s working, and my employer at the time had a weekly giving program that you could donate a few bucks. It's something you didn't miss, and it went to the local United Way. That was my exposure to the United Way. But for the listeners who have maybe heard about the United Way but really don't know what you do, why don't you tell us?
Sure, be happy to. Interestingly, that's how I made a connection with the United Way, very similar to yours, Jeff. I was working for Fidelity. They owned our newspaper company at the time that I worked for, and they had a workplace campaign. What's interesting about the Cape and Islands United Way is, given as you would expect, the small, we have a lot of small businesses. We don't have a lot of big business.
Right.
So we rely very little on workplace giving, which is unlike any other United Way. The majority of our funding is coming from individuals, corporate sponsors, grants, The workplace is where some people have been associated with it, but we're much more than that today. I always tell people, Jeff, this isn't your grandparents' United way.
I'm sure it's not. You have to change and adapt to not only your demographic and regional challenges that you're talking about, but different generations look at giving and give differently, right?
Totally. Our younger audience, the younger people giving today, they need to feel and touch what they're doing. And so that's where we engage our corporate people with volunteerism so that those people can see what the United Way is doing. And then that makes them say, okay, yes, I want to be a part of it. So giving today is much different. There's a lot more targeted giving, if you will. And so we've got to take all that into consideration when we're out there seeking support. But I have to say, all of the donors and individuals who've supported us, this will be a record year for us in terms of putting money back into the community in terms of grants.
Well, that's fabulous. I'm not surprised because I know that you and your team does a great job and works really hard, but I wondered if we talk a lot about inflation on the show, as you might imagine, but I was wondering if inflation and stress budgets, I mean, something's got to give and people make decisions individually, but I theorize that maybe people had to cut back on their charitable giving. Are you not seeing that?
Well, I am hearing that there are many nonprofits that are seeing people cut back, and we've seen some modest cutback. But fortunately, Jeff, we have a number of angels, I call them, who have the capacity, and they're increasing their support to us because they're recognizing what's going on in the community. You know, a perfect example, we just received the largest donation ever to the Cape and Islands United Way in the amount of $250,000 as a grant from National Grid. And that will all go to our collaborators and partners that we're working with to make sure nobody has to suffer through a cold winter.
That's an awesome thing. And that's a big topic for people this winter. They're wondering what's the price of fuel, oil and gas, natural gas is going to be. So tell us about a couple of the programs. You know, we know you get money through donations, and we'll talk about that before we leave. But tell us about where the money actually goes after you've received it.
Yeah. Well, we focus on 4 areas, basically: education, health, financial stability, affordable housing, and food security falls under health, if you will.
Sure.
So those are the areas that we try to work with. And again, some of them are large projects supporting Housing Assistance Corporation. This summer, we had our annual gala and we raised $185,000 for their Thrive program at Housing Assistance Corp. And then it's in small ways, Jeff. We have a micro grant program, and that supports volunteerism. Great example, a group of Girl Scouts from Sandwich came to us and said, the community garden isn't accessible for people with disabilities, and we'd like to do something about it. So this was they wanted to create raised beds, but they didn't have the money. We gave them a $3,000 grant. They created raised beds at the community garden so that people with disability issues could utilize the garden. So it happens in small and large ways, what we're trying to do to just make a difference in what our donors are making the difference. That's what I should say, is our donors are making the difference. And so that's kind of where our focus areas tend to lie. We do a lot with food security, as you can imagine. Basic needs right now, Jeff, when you were talking about the toys and the parents, that maybe their basic needs are a real challenge this year given the inflation.
Yeah, we hear that from a lot of our clients and just individuals in the community. And it does start with some of the basic needs like food and shelter. And so that's
Yes.
why, that's why we decided to participate in the Tons Toys for
Yeah.
Tots this year because, you do what you can, right? And
Right. You
that's
know,
an
we
easy
ju-
way.
we just did a Giving Tuesday promotion with Puritan Cape Cod, and they donated 10% of the proceeds from the day to benefit the Cape and Islands United Way, but they went one step further. Working with us, we collaborated. For every $150 somebody spent, a North Face
Wow.
child's coat was
Wow.
donated. So
I
we
love
were
that.
able to raise 100. We got 100 brand new North Face coats that we'll be distributing to our collaborators, who have obviously needs to be met in terms of keeping kids warm. But again, that's people felt when I asked Rick Penn about it, he said, some of the people didn't know about the promotion, but when they did, he said, you should have seen their face. He said their face lit up when they knew that their purchase was going to also provide a warm coat this winter.
Well, back to your earlier point, Mark. When you can actually visualize how your gift is being used, it's certainly a motivator. And buying something and then having a coat set aside, you can actually see in your mind that coat going on a needy child or a cold child, and
Absolutely.
that's a great strategy to demonstrate to the donor how their generosity impacts actual people, right?
Correct.
So tell us how you receive the money. Like, where does your money come from? How much of it is like this time of year? You said you gave the percentage, but how do people actually support your organization? If someone's listening now and they say, well, I don't work for an employer, I'm retired, so I can't do that how I used to do
Yeah.
it,
Yeah.
meaning out of your paycheck. What's the best way for people to support you
Well,
directly?
they can support us online at our website. They can also support us at our events. We have certain events throughout the year that help raise funds for our initiatives. And we're happy to talk to anybody who is interested and making an impact in the community, because again, you can make an impact in small and large ways. The majority of our funding, as I said, comes from donors, events we have, corporate sponsors, grants that we pursue, and all of that adds up to what we can give out. So we give out grants through our community impact grants. That's our annual grants. We also have our micro grant program. And then we have our Women United, which is another fund where we focus on women in families. So there's many ways people can support us and also get support from us.
And that website that you have, if I have it right, is Cape and Islands uw.org.
Thank you. I forgot to mention that, Jeff.
No,
So
that's
thank you
okay.
for the
And
plug.
we'll post it on our social media outlets. And there's a button right there for you to give today. You
Yeah.
you can actually apply to be a partner, and you can contact them. It's a very good website. It's got a lot of great information. And right on the homepage is some of your projects that you've done and how many people you help. So, once again, Cape and Islands, UnitedWay.org. So please check that out. We're just about running out of time, Mark. Any final words or anything you'd like our listeners to know before we head off?
Yes, I would like everyone to know that all the money we raise here stays here. There's everything we do, we put right back into the community. We have a modest, fee you pay for United Way Worldwide,
Sure.
but the
Yep.
majority, everything we raise stays right here in our volunteers. Our board decides where that money goes.
That's important to people everywhere, I'm sure, but I have found in the decades that I lived on Cape Cod, that was uniquely important to Cape Cod, a very parochial sense. They want their money to stay there. They want it to positively impact their neighbors, their friends, the people in their community in need. So I can understand why you would highlight that. And it's important that when people, especially with a national or international organization, that people realize when they make a donation to the United Way of Cape Cod and directly from that website, if they choose to. I think another way that might be interesting to people, and you've touched on it, and I wrote it down but forgot to mention it, is I know we have a lot of business owners who listen to the show. And, as you said, Mr. Penn partnered with you at Puritan Clothing with a promotion to get, it certainly helps people in the store as well. They're profiting from this partnership. But if someone has a restaurant or retail business, or it could probably be anything, they should give you a call, and maybe there's a way that they can help the United Way and help our community by helping their business as well.
Excellent point, Jeff. Excellent. Yes, there's a lot of ways we can collaborate.
Mark, it's always a pleasure. It's been a few years since I've seen you, but it's a pleasure to see you today and talk to you. And I wish you and everyone at United Way a blessed holiday season and continued success. You do great work. And thanks for making time to come on the air and talk to our listeners.
My pleasure. My pleasure.
And to the listeners, stick with us. We'll be right back after the break. We're going to have Brian Regan, who's our Chief Investment Officer, talking about all things economic in the market. We'll be right back. Thanks for sticking with us. This is Jeff Perry sitting in for Chris Boyd this week of Something More with Chris Boyd. Chris will be back next week, has the weekend off. I hope he's doing a lot of holiday shopping. Maybe he's shopping for all his faithful employees, getting us generous and big gifts for the end of the season here. Very happy to have with me on the air Brian Regan, who's our Chief Investment Officer. Brian appears almost every week on the show. I guess this misses a week now and then, but like to have him on to give us his expertise. He's our go-to guy on all things investing and economic, and I wanted him on this week to talk about a few things. Welcome back, Brian. Thanks for being with us.
Good to be here, guys. How are you today?
Doing great. We've had a good show. We've had Sheriff Cummings in for the first couple of segments talking about his 45-year in law enforcement. We had Jeff Tominay on talking about holiday spending, and that was the first hour. And right before you, we had Mark Scala with the United Way, who gave us some great insights on giving, charitable giving, and where the money that you donate to the United Way goes. So I wanted to spend a good long segment here with you talking markets and money. And I guess I'll start, and you can go wherever you'd like. But I guess when I'm thinking back this week, I think about Jerome Powell's comments on Wednesday, I guess. He was talking at a conference and sounding, at least commentators are all over the board, and a lot of cheerleaders on both sides of these issues. But to me, he sounded a bit more dovish, as we'll say, like not so aggressive maybe with the Fed activity. How did you perceive his comments?
I was shocked the way the market reacted, honestly. I didn't think he said it. I didn't think he said anything different than he said in the prior press conference when they raised Fed funds by 75 basis points. In that press conference, the last one that they had after the last meeting, they basically laid the groundwork for slowing the pace of increases. Mm-hmm. And he more or less just confirmed that in the conference the other day. So yeah, I wasn't surprised at what he said. I was surprised that the NASDAQ was up 4% based on information we basically already knew, in my humble estimation.
Well, you're probably right, but the market perceived it and I perceived it. Maybe it was more, speaking for myself, not for the market. I think it was more of a relief that he didn't say something contrary, right? Because the meeting's getting closer. And we've had, more data each month that comes out, and most of it's positive that the Fed's actions are getting at the edges of inflation. and I was just, I guess maybe it was a reaffirmation or a relief that he didn't get more hawkish, that they're still on that trajectory, and maybe we're closer to less tightening. And I also, I heard one comment that he said specifically, which I thought was encouraging, that and maybe he said it before, but it jumped out at me that, he is seeing signs that their actions are taking hold. And, with the caveats that he says. So it was just more of an optimistic thing than maybe I feared. And maybe that's how the market looked at it.
I think you're right about that comment, because he has said in prior press conferences that he didn't think there was much evidence of inflation slowing at all.
Right.
So that comment, and we do dissect the chairman's words for sure. I think that comment was a bit of a change to a more dovish tone. But again, I think it was consistent with the meeting prior. I think you're a little right. We were in this interesting situation maybe a month ago, so say a month ago, where the S&P 500 was nearing 4,000 and the 10-year treasury was over 4%.
Right.
And I didn't think that was a situation that could persist. One of those things had to give, or both of them had to give, right? Either the 10-year was going to have to come down dramatically, or the stock market was going to have to come down dramatically. Or they were both, or the 10-year was going to have to come down a little bit and the stock market was going to have to come down a little bit, but something had to change.
Mm-hmm.
And what have we seen? Well, it looked like we were having that normalization where they were both changing a little bit for a little while. And now it looks like the 10-year has just plummeted. I mean, from over 4% to, 360, shade below 360, that's a 10% move in a 10-year treasury, 40 basis points. That's where I'm getting that 10%, 40 basis points,
right. Yep.
percent. That's in a week. That is a huge move. I mean, we've seen a ton of volatility in the treasury market this year. But that is just incredible. And it's a reflection of the fact that we're in this business cycle that is enormously quick. The pandemic and the reaction to the pandemic caused this business cycle that typically lasts, a decade or more, and it's lasting a couple of years.
Right.
And it's really remarkable. And I think that's being expressed in the volatility of the treasury market. And, also, to that point, being expressed in the volatility of the stock market. And I don't mean volatility by just going down. I mean volatility of even when it goes up. Well, it goes up by 4% a day. Those are very, very significant moves. I mean, it's probably only happened handful of times in the last 100 years. And in the last month, I think we've had 2 days like that.
Yeah.
So we're in this situation where the cycle's super fast, which is leading to super volatile treasuries, which is leading to a super volatile stock market. And all I have to say is good luck to the people who are trying to time it out there. You just can't do it. I've seen people try, and quite frankly, for the most part, fail miserably, because like you said, the market was maybe relieved that it didn't have a hawkish tone, and that was enough to send it up 4%. Good luck trying to figure that one out.
Yeah, if you were trading yesterday and you had maybe you were trading in fear of what the chairman would say, you're just guessing because no one knows.
Yeah,
and you can guess the wrong way.
Right. I think I went to a fund provider. I don't have much respect for this fund provider, so I'll leave the name out. But I went to a little investor conference that they put together this week, and they were estimating that the stock market was going to fall about 20%, from where it was on Tuesday. Now I thought
Tuesday.
That was
Tuesday, the day before Wednesday,
right?
Meaning the day before this rally, if you will.
Well, it was just a really bold claim, and they didn't have much evidence to back it up. I'm not saying that it can't happen, and
sure,
given the cycle that we're having right now, it certainly seems like it's possible. But their whole reasoning for why it was going to happen is because they're anticipating a recession, and that's true. Recessions generally aren't good for a lot of reasons, and I don't think I'm breaking any news there.
Right,
but I do think we need to realize that the stock market tends to bottom before the recession starts. So, we've all, the S&P 500 is still down, call it, north of 15% from its highs. We've still given, we've given a lot back. We've gained a lot from the bottom. It seems fairly clear to me that there, at least in the near term here, we've put in a bottom, because the stock market would have to retrace quite a bit. I'm not saying it's not possible. It's certainly possible, especially in 2022, but would have to give back quite a bit to hit a new low for the year. So I guess what I'm saying is it's very possible that the stock market anticipated the recession, sold off, and possibly is doing the conventional bottom before the recession starts. That's a very strong possibility. And, that's why I kind of roll my eyes when people say the stock market has to fall by 20% more, just because, there's a possible recession on the horizon.
Yeah. Yeah. You've commented before, and I've looked at it independently, but recession period does not mean the stock market is down during the period of recession.
Oftentimes it means it's up.
Yeah.
Right. I mean, we talk about all the time,
forward, right? Market's always looking forward.
Right. I mean, we talk about all the time how, I don't, this year, I think I got on my soapbox a couple of weeks ago, Jeff, you might remember that, I was a little frustrated that the market hasn't been looking as forward
Right.
as you might assume. But generally speaking, yeah, I think, in the context of history, that's absolutely correct. Like like we just talked about, that it typically bottoms before the recession. But if you think about how you value stocks based on future earnings,
Right.
Future cash flows, and interest rates. Now, even let's say that earnings fall 10% during a recession, and instead of $230 per share on the S&P 500, let's say we have $210 a share. But that's only one side of the equation. If we have interest at the 10-year Treasury fall another 50 basis points, as it's already fallen 50 basis points in the last month, that is going to be a huge tailwind for stocks, because the divisor is going to be a much stronger driver than the numerator, in this equation.
It would be the opposite of what was happening in the spring and summer.
Yeah, and this isn't unprecedented. Like this happened in 1981, 1982. We saw the stock market actually rally 20+%, and earnings were down 20%. Don't check my numbers there, but ballpark speaking, that's what happened. So this is possible, and it's especially possible when you're in a situation where inflation is falling, as it is right now. Color me a little bit more optimistic, certainly than I was, 6 months ago.
And it's consistent with other things that you've been saying, certainly. And it's consistent how we generally advise our clients, if they have the risk tolerance, time horizon, and such, to be in equities. We sincerely believe it's time in the market and not timing the market. That's the best strategy. And when you miss days like yesterday, if you miss days like Wednesday, in the scheme of market cycles and how they go up and how they go down, if you miss those really good days, we've talked about, the data is that your returns really suffer significantly. So if you're going to be in equities for the long term, which is, solidly a place to be for many people, depending on their circumstances and tolerance, you have to be in the market to get the advantage of those days. That's simple.
100%. How many times, have people, the story is common, right? You take too much risk, market goes down, panic a little bit,
get out,
sell low, you end up buying high and selling low, and you can never gain back the traction that, the market has. And this is often why people, I tell people all the time, you can get exposure very cheaply and very easily to the S&P 500. Okay. You get an index fund that costs almost nothing, but the S&P 500 is more volatile than the average person can handle. It's just reality of it. We've had 3 bear markets in 4 years. Okay. So I say often that this is very common, but if you have $1 million portfolio, can you see it fall to 800,000? That is a question that you should ask yourself, and that's not abnormal. If I've had people tell me that this is abnormal circumstances for X, Y, and Z reason. This year I would call what's happening in the bond market abnormal. I would not call what's happening in the stock market abnormal. This is certainly a normal type of bear market. again, we've had the stock market down north of 20% 3 times in the last 4 years. I wouldn't necessarily categorize, the last 2 times as real bear markets because it wasn't as drawn out as this one has been. But, in terms of stock market history, this isn't very dragged out either. I mean,
it is important that people look at the history because it isn't abnormal. And we tell our clients when we're meeting with them, prospects or clients, and we're going through those questions about can you tolerate a loss and all that. This is normal market behavior. Circumstances are different every time. History, repeats itself, but the players are different. The circumstances are different, but you can draw reasonable assumptions from market activity when you go back and look at what's happened.
So one of the things, Jeff, I wanted to bring up.
Yep.
And I hope this isn't a tangent, but I think we have a little time here, right?
Yep.
For years, the international stocks have lagged domestic stocks. And
Correct.
For good reason. First of all, we've been underweight our benchmark internationally, partly for those reasons. We've had many clients say, I don't even want any international stock. And our position generally has been, we'll take the extra diversification. Diversification is the only free lunch in investing. There are long periods of time when international stocks tend to outperform. In the United States, we have a heavy emphasis on, particularly in the S&P 500, we have a heavy emphasis on software type companies. And internationally, there's a bigger emphasis on industrial type companies. So sometimes if you just want to, shift from, the software type companies to industrial type companies, you could do that, from your versus your international versus domestic allocation. So why do I bring this up? International stocks have erupted in the last month. And if you didn't have any allocation to it at all, it wasn't to your benefit. Right. I don't know if this is going to persist. My guess is that the majority of it won't persist because a lot of it is driven by Chinese stocks right now, which I think is speculative, but not all of it. And I think some of it will persist. And I think, there's likely some very, very good valuations on some good companies over there. So this is a long way of saying, I don't think that we should always just ignore our international allocation. It's been underperforming for a long time. That's true. But there might be a time, especially as the dollar falls versus other currencies in the rest of the world, where international will have its time to shine. So just if you are one of our clients, you have an allocation. If you are not one of our clients, I'd recommend just exploring it. People tend to have a home country bias, and there's not necessarily anything wrong with that, particularly if you live in the United States. But you might be missing out on, at the very least, diversification opportunities.
Well, that's good advice. Diversification is something that we certainly preach and we practice. And if somebody's out there and they want some help with their portfolio or they're interested in talking to us, they should check us out at our website, amrfinancial.com, or they can give us a call at 866-771-8901, whether you want some advice on investing or you'd like to help get some help with a comprehensive financial plan. We're happy to review your plan, help you create your plan. However we can serve you, we act as fiduciaries, which means we act in the best interest of the client. We're not compensated on a specific product that we sell or recommend. We do better with our clients when we help them achieve their goals. So give us a call, check us out, amrfinancial.com. Brian, I did want to talk about, we got about 6 minutes left. We talked about the market, certainly, and thanks for adding on international exposure. Housing, it's certainly something that's been in the news quite a bit lately. And for all of us who are homeowners, it's something, maybe one of your biggest assets in your portfolio of assets. And how are you viewing, just generically, we can get down into some of the numbers. I looked at a site, realtor.com. By way of disclosure, I have a real estate brokerage license in Massachusetts and in Florida. So I read a bit more about housing maybe than the average person, but realtor.com did this forecast for 2023. And just to summarize it, it's a very long report, but just to summarize it, their projection is that the 2023 housing market could become no one's market, not friendly to buyers or sellers. just to set a stage. How are you looking at, in the context of what you do, how are you looking at the housing market?
Well, I own real estate too. So
Yep.
like you, Jeff, and maybe a lot of people listening, it's certainly the biggest part of my portfolio. One of the great things about real estate, it's not an auction market. It doesn't change tick by tick like the stock market does, right? Because
Thankfully.
if it did, I think there'd probably be a lot of people panicking right now, right?
A lot more buying and selling too, probably.
in the stock market.
Yeah.
Oh, you mean if there was listed like the stock market?
Yeah, you could see, there's a deal. I'm gonna make a bid.
Yeah. I don't know what it's like down there in Florida, but it's probably a lot different than Massachusetts. It's tough to evaluate where we are here in Massachusetts in the residential real estate market because it's so seasonal, right?
Yeah, we're coming into our season. You're leaving it.
Yeah, the season's basically over here in New England, right? The season kind of starts in the spring. And I think that's typical if you look at Redfin data across the country. Spring market's typically where most of the inventory comes online. So it's hard to see, I think, right now, get a real actual feel for it. But, somebody who is a amateur follower of the local market, it certainly seems like there's a lot more price cuts than there were a year ago. I don't know if you're seeing that. We seem to be staying on the market longer.
Yep. Inventory is up. The number of homes, arguably 6 months, a year ago, we had a record low inventory. Like if a house was on the market and it wasn't priced crazily, it sold quick. Now it's kind of more of a normal market, normal amount of inventory. That Realtor.com survey said inventory is up 22.8% over the last 12 months, but prices are holding up pretty well. And they're projecting that prices are going to slightly rise in 2023, not go down.
Yeah, I mean, that's interesting. I don't believe that personally.
You don't believe that the prices are going to hold?
No, I think they're going to go down. I think they're going to go down fairly significantly too. I mean, just pick any house on Redfin, for example, right? And they have this chart that shows the estimated, value of the home. And you can see in 2020, the line just goes straight up and to the right.
Right.
To me, that's probably seems a little irrational and probably needs a little bit of an adjustment. And the reality is that more interest rates are double what they were a year ago. And, when that happens with a stock, all things equal, if interest rates double,
right,
the stock should have.
Right.
Okay? So that's not necessarily going to happen with the housing market. And the housing market, again, the pricing is a little stickier. There's a lot of reasons why it's just not going to correct right away. But I think if you're patient and you're looking to buy, you could be coming into a decent opportunity. I think if you're thinking about selling, I think it's probably still a seller's market now on the whole. But that seems to be rapidly coming to an end from what
it does. Yep. And I'm seeing the same thing here. If you're a seller here and you're rational about the price, not what the price was in June, but if you're rational about what the market is today, you will sell your home in a very reasonable amount of time. But so many people get in their head, well, this house was worth $800,000 in June. I'm not going to sell it for $7 million. I mean, it's not rational because that's not where the market is today.
Right.
But they've seen a number that their neighbor sold their house for not that long ago. And so many of them get stuck there. And the buyers, on the other hand, see the negative side of the market, the pressures on the market, and they're looking for deals. So somewhere that's going to find equilibrium.
One of the things, Jeff, you as a realtor, I'd love to hear you talk about someday, is the challenge of when you need to sell your current home in order to buy a next home.
Right.
How do people deal with that? And what are your options?
Yep.
In my circle of influences, I know this is a huge problem that people have.
Very
people
common.
Are having their third kid, need a bigger house, but they're stuck between a rock and a hard place, right? They're having trouble buying a new house. They're also having trouble selling their house. And obviously you'd like to get some arbitrage, some kind of deal there, but it's a difficult situation.
And it's a real stressful time for people in that situation. Oftentimes they find their purchase before they find their buyer. So Brian, that's a great idea for a segment someday to go into a little bit deeper. But for this segment, we're running out of time. Thanks for your expertise again. I hope you're having a good weekend, and we'll see you next time.
Okay, thanks, Jeff.
And stick with us one more segment, listeners. We'll be right back after this brief commercial break.
I guess you're just what I needed. What I needed. I needed someone to feed. I guess you're just what I needed.
Thanks for sticking with us for this final segment of this week's Something More with Chris Boyd show. I'm Jeff Perry sitting in for Chris, and I don't know if you've noticed, but the music, we call them bumpers, that we played coming in and out of our segments has been focused on Fleetwood Mac this week. For those of you who are fans or saw it in the news, their singer, songwriter extraordinaire, Christine McVie, died this week at the age of 79. So we're paying a very popular band once, and still their music is still popular today, paying tribute to the band. And I asked Cathi Ingersoll, our marketing director, to join me for this last segment because I have found out this past week that Cathi is a big Fleetwood Mac fan.
I am.
So welcome, Cathi. Yeah, so I bet this brought back a lot of memories hearing of her passing and all of her, the stories related to her career.
Yeah, it's I didn't know her personally, obviously, but listened to a lot of her music, and she's one of my favorite performers. So many iconic songs, that you remember growing up. And
do you have a favorite?
You know what? I think there's a few of them that I like really a lot that she sang. Everywhere, Say That You Love Me, Songbird, Don't Stop, which she wrote as well as recorded.
That's that's still popular today, that song. It's so thematic, the different parts of your life. And
probably one of the leading women in the rock and roll arena, not hardcore rock or anything, but her husband, John McVie was in Fleetwood Mac, and she joined the group. And then they had a lot of success on their own before Stevie Nicks and Lindsey Buckingham joined them later. So Fleetwood Mac's been around for a long time, and certainly she was an integral part of it for the majority of that time.
I associate their music, and so with the time period that it was out, right? And we were younger then, Cathi.
Yes.
And it does bring you music to me when I hear an old song. It brings me back to that time, right? You just, if it's in your high school years or whatever it is, it brings you back to those times. And Fleetwood Mac group, if you will, is one of those groups that you hear a song, you might not know who sang it, but then you're not surprised to hear it's Fleetwood Mac. I mean, they had a lot of hits that you don't remember that they're there, but they had so many hits that you forget they were theirs.
And their band had a lot of public, what do I say, Jeff?
News.
A lot
public
of
news.
Exactly. A lot of public soap opera drama as well.
Didn't they do a song with Tom Petty? Or was that just Stevie Nicks?
I think just Stevie Nicks.
Yeah,
but,
okay.
Of course, Lindsey Buckingham was a very successful solo performer, and
sure.
Then he and Christine McVie did a album together, and I think it was like 2017. It was supposed to be the whole Fleetwood Mac group, but another female performer apparently didn't want to participate, so yeah. They went out on their own. A lot of
that, and their music has survived very well. Meaning it's still, and I'm always surprised when people younger than us, I'll just say younger than me, like decades, generationally, is still listening to this music.
Yeah. Yeah, that's funny that you say that. Even my my son, when he was probably 10, 12 years old, was listening to the Beatles. I'm like, what?
Yeah.
But it's definitely music that lasts its time. lasts the test of time, I should say.
It does. Well, it's sadly, we're seeing our performers from the 60s and 70s they are slowly leaving us. So we just wanted to stop for a few minutes today and share the music with you and bring on Cathi here to share her memories of it and comment a little bit. Thank you, Cathi.
Yeah, and as I promised, I won't try to sing any of her songs.
Well, it's on you if you want to go.
Oh, no. I wouldn't do that to our audience.
Thank you, Cathi. I just have one more reminder to our listeners. Earlier in the show, I mentioned that right now, Saturday afternoon into the Saturday evening, and tomorrow, Sunday, is the 27th annual Stuff-A-Bus. Kevin Matthews from WXTK is out there for the 27th year, I believe, in front of Target at the Cape Cod Mall, collecting new and unwrapped toys. And this is for the Toys for Tots program. And, as I mentioned last week when we had Kevin on the air live, all the toys that are donated here will stay on Cape Cod. And I believe our CEO, Chris Boyd, is bringing over to Target today the box that we stuffed at our office. And, thank you to all the clients who stopped by and the members of the public who stopped by the Office of Asset Management Resources and contributed a toy in these tight economic times with inflation. These toys will be the difference between some children getting toys or getting more toys. So thank you for that. If you haven't participated, please stop by and see Kevin. Chris will be back next week. I want to thank you for listening. And until then, keep striving for something more.
I'd be rich.
You're listening to Something More with Chris Boyd, Financial Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.